good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a quick look at what's taken place in the first quarter of a very eventful equity and financial markets overall, both at the regional and international levels. Now, there was a lot of activity taking place, again, driven in large part by geopolitical events and developments. In fact, let's take a look at what would have occurred and what investors might expect as we continue deeper into 2026. On the local front, for that first quarter of 2026, very similar reading to the past few years in terms of overall market movement, with the Trinidad and Tobago Composite Index in that purplish color, declining 1.4%. Comprising that Trinidad and Tobago Composite Index, of course, is the cross-listed index, which includes cross-listed securities across the Caribbean, select cross-listed securities, that is, as well as the All Trinidad and Tobago Index. The All Trinidad and Tobago Index in that bluish color down 2.2%, while the cross-listed index actually advanced just about 0.7% for that first quarter period. Now, although it has been fairly similar performance to the past few comparable first quarters of activity and market direction, there were quite significant movements or variations in terms of stocks and their individual performances, in terms of the major advances and decliners over that first 3-month period. On the positive end of things, TTNGL was up a whopping 202%. Of course, they move ultimately to change their, for special amendments and special resolutions to change the capital structure and resume dividend payments, rather, would have led to a resurgence in that particular stock price. Ultimately, TTNGL recently declaring a special dividend of $1 per share, and that expectation would have, of course, driven that stock price up over the past few weeks. National Enterprises Limited also up a whopping 86%, improving quite significantly on the heels of, again, that improved local domestic energy production output, as well as geopolitical developments, which would ultimately read down to the benefit of some of its investee companies. Flipdeco advancing 51%, Guardian Media Limited up 9.7%, and GMMB Group Limited up 6.6%. Also, on the other end of things, in terms of decline, as we can see, that LG Williams B was down 13.6%, Answer Merchant Bank down 14%, Angostura Holdings rather down 14.6%. Answer Macau would continue absence of dividends down 15.3%, and ES Bridance Holdings moderating perhaps a bit in terms of its performance relative to stock price, down 26.3% over that first quarter period. When we take a look at overall activity by volume and value on the Trinidad and Tobago Stock Exchange, there has been modest improvement in terms of traded values, with traded value over the comparable quarters improving just about 13 to 14% from 180 million TT dollars traded in that period of January to March 2025 to just about 205 million over that period, January to March 2026. Traded volumes are improving near 50% from 21 million shares traded to just about 34 million shares overall. Turning to the international side of things, well, it has been quite a choppy market and choppy market performance, rather, over this first quarter. Most recently, but we took it to the middle of April. In terms of market performance for U.S. equity markets, with the S&P 500 declining as much as around 8 to 9%, but recovering subsequently to break even just negative 0.3% overall. And of course, this has been driven in large part by developments in the Middle East, with ongoing conflicts and tensions, and subsequently the prospect of recovery and resolution. And of course, over the weekend, negotiation talks between Iran and the U.S. would have taken place with no conclusive outcome as yet, and that will probably lead to another leg down in international markets as the weeks go by. In terms of sector performance, we can see that dislocation in energy markets and the Middle East has led to a significant outperformance in the energy sector on the U.S. S&P 500, followed by materials and industrials. Energy up 28.2%, materials up just about 14%, industrials and utilities up between 10 to 11%, and not surprisingly, on the flip side, consumer discretionary down 6%. Of course, that will be impacted by inflation expectations, as well as financials down 6.3%, again attributable to significant dislocation in energy markets and the impact on overall financial health of several companies, of course. When we take a look at the broader regional impact, or regional ETF impact, we can see that compared to the first quarter of 2024 and 2025, in 2025 and 2026 rather, in that first quarter of 2025, US markets were down just about 14%, again driven in 2025 by tariff tantrums. And in 2026, again, that market performance has been largely attributable to that Middle East conflict. Looking at Asia ex-Japan, we can see that Asia ex-Japan has actually improved 10% in 2026 relative to a decline of 8.5% in 2025. Europe also up just about 4.1%, and commodity-reliant and commodity-heavy Latin America has advanced, in fact, 22.6% in 2026. Again, perhaps one of the beneficiaries of dislocation in Middle East energy markets, while in 2025 they were up just about 4.4%. So what can investors expect to drive equity markets as we move further into 2026? On the domestic front, macroeconomic conditions continue to be somewhat tepid at this particular point in time, but developments in the energy space, particularly in terms of domestic production and the domestic production outlook, seem to be turning positive with the prospects of improved natural gas production from both domestic as well as cross-border fields, certainly becoming a much higher probability based on media reports. Rising domestic interest rates continue to weigh on investor expectations and perhaps make equities at this particular point less attractive relative to potentially lower risk with higher certainty in terms of return. Fixed income options earnings trajectory, however, continues to be positive for most major blue chip equity listings on the Trinidad and Tobago Stock Exchange, and that has resulted in ultimately attractive valuations for investors adopting a longer-term mindset and willing to take equity risk as we move through a particular economic cycle, with perhaps some more positive outlook in the medium term. At the international level, geopolitical tensions will continue to lead to overall market volatility, both in the financial markets as well as commodity prices, resulting in ultimately slower GDP growth as energy costs weigh on real GDP activity or real GDP advancement across most major economies. And of course, that uncertainty in the geopolitical space and inflation space is going to rekindle interest rate uncertainty, which could lead a bit more to interest rate uncertainty as we move further into 2026. Well, that's it for this week's edition. For more information, you can give us a call at 2BORS or 226-8773. Email us at info@borsefinancial.com. And of course, you can check out our website, borsinvestment.com, where all of our research is absolutely free. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.